happening in the world rather keenly, especially in America, and wondering who is the real president of the United States, Tom? Could it be Scott Bessent?
Well, I can say, having watched things recently, I would never want to actually say that President Trump is not in charge, but he is at times a very good delegator. Let's just put it that way.
Mm,
So at time, right? So what I'll tell you is if you've been astute this week for the last, well, certainly since the beginning of the month, the guy who has been most front and center, taking charge of the messaging of what's happening has been Scott Bessent, the Treasury Secretary. Represent this, the Treasury Secretary. I always get his name wrong, and I just want to call him Big Gay Patton all the time. But because it's just the best nickname ever. And I know he goes by Swamp Fox, which is appropriate since he's from South Carolina. That's his secret. That's the Secret Service handle. He let that slip the other day, and we're like, dude, no, it's Big Gay Patton. Come on, you know. So I hope that that's filtered up to the White House, if it, or to the Treasury Department. If it hasn't, well, we'll keep putting out there to meme it into existence. But if you watch, I mean, his interview spate, certainly since like the middle of July, Besson's been out there doing the interview tour with everyone. I absolutely recommend for the financial normies in the room, like watch his interview he did with Mike Rowe on Mike Rowe's channel. There's a couple other like basic, where he gets into the basics for people. But what's interesting is that he is at this point directing what's happening at the political level or at the geopolitical level, while Trump gets to now focus on shoring up the midterms by campaigning for the midterms and shoring up candidates and all the other stuff. Notice how Trump is basically taking a back seat. He's now
mm.
focusing he's almost exclusively tweeting about domestic policy. This morning he had a big thing about lowering beef prices in the United States, and then there was and that's all that stuff is what's been going on, right? But since the intervention at the end at the end of July, he has been in everybody's crosshairs. And at least, that's the version of Twitter I get on a daily basis. And I can tell you that it's chocked to the gills. I can always tell like what everybody is pissed off about in London by watching who gets shunted into my feed on a regular basis and how much nonsense gets shoved into my feed, because all of a sudden people I don't interact with whatsoever are all over my feed. Yeah, screaming about whatever it is that Besson's doing that's, destroying their world. Like, it's, hi, you get this today because you're nominally part of, oppositional FinTwit. So you get this, and you're going to get endless proclamations from everybody and their brother that Besson's turned into Janet Yellen, that he's in this and he's that. So I'm a little scattered here just to set the stage, but it all stems back to that intervention he made in the Japanese yen at the end of July, which then he followed up with on Monday with this announcement that he's going to expand an already existing program, but the Treasury is going to buy back some long dated debt and retire it. And immediately everybody's out there screaming, and he's Janet Yellen because he's doing yield curve control. He's buying the long end of the curve to suppress rates and then he'll probably sell into the short end of the curve to flatten the yield curve. I'm like, no, he's not. He's not flattening the yield curve. He's just tamping down the long end of the yield curve because we don't have control over the long end of the yield curve, as I mentioned in multiple podcasts, probably with you and others, because we don't control the GSEs, Fannie and Freddie, which their job is to control the long end of the yield curve by making a market in 30-year fixed rate mortgage-backed securities. They're in that market, but they're nowhere near in that market the way they were before 2008, and they were put in conservatorship, right?
Right. Okay.
And
Tom, just
so
to keep viewers up to date, the
right.
long end of the yield curve, what you're referring to are 10-year and 30-year bonds.
Well, anything beyond 5, really. But yes.
Okay.
Yeah. 10. So 5 in American parlance, it would be 5s, 7s, 10s, 20s, but there's just not that many 20s out there, and 30s. The real big ones are the 10s and the 30s. There's two reasons why the 10s and the 30s are important. The 10, of course, is it's the benchmark lending rate that banks like the 2-10 spread, because that's how they make the spread between the 2-year and the 10-year, because they make their money on the difference.
Mhm.
Okay. They're that's what they do. And then the 30 is where central banks and institutional players like to play, okay? Because that's what they buy. And if you believe in the theory of nefarious actors in this world, which I do,
Hmm.
then with the lower liquidity in the 30-year bond market, doesn't matter what country you're talking about, moving 30-year bonds to write headlines is a lot easier than moving 10-year bonds to write headlines. Okay.
Right.
So understand that we do not have free markets. We have central bank dominated markets, and a lot of the central banks don't like each other any more than the countries like each other, any more than the leadership doesn't like each other. So all of these relationships, they're all built on the same basic framework. We're at war with Europe for financial independence. Well, what is that going to look like? Well, it's going to look like Donald Trump and Emmanuel Macron not getting along. It's going to look like Donald Trump getting rid of Keir Starmer. It's going to look like Donald Trump saying nasty things about Frederick Merz over in Germany or whomever. And it's going to also look like then, oh, well, you don't like England? Then the Bank of England is going to sell some 30-year bonds through their proxies or whatever they're going to do in order to write a headline to make Trump look bad 2 months before the election. This is not complicated stuff. This is not 4D chess. This is the way the world operates. And so when you understand that the world operates like this stuff is very simple. And anybody telling you that it's not, that this is just Luongo like talking out of his ass, I'm like, no, that's you literally saying I eat crayons because you can't handle basic freaking analysis. Like, you know what I mean? Like, I watch this stuff and I'm like, really? So, okay. So let's back up for a second. So what was Besant saying the other day? It's very simple. Anybody who was freaked out about the yen intervention, right? Don't worry, American pension funds. Don't worry, American, insurance companies and reinsurance companies. Don't worry about this. The Treasury stands ready to help navigate this scenario. Now, the standard analysis you get, kind of like the zero hedge level analysis, and I'm going to call them out because, why not? Is that, and it's kind of the standard free market kind of pseudo libertarian analysis, is that, well, America's losing control of the global reserve currency. They're bogged down in Iran. They're losing the war, blah, blah, blah. Oil prices are out of control. And therefore, the world is turning their back on dollars and treasuries, and that's why the yield is rising. It's a perfectly valid story under normal circumstances, but it's not true because they're not looking at German bond yields hitting all-time highs, British bond yields hitting all-time highs, French bond yields hitting 25-year highs, and all of this stuff, and the same things. They're only focused on the two countries trying to get out from underneath this horrific, this zombie Eurodollar system that ended when the United States moved from LIBOR to SOFR, as I've been explaining for the last 4 years, 5 years,
Right.
four and a
Now,
half
if
years
I
ago.
just so
Sure,
I can keep new viewers and people who don't have
sure.
knowledge about the financial markets. So the euro dollar system, because I used to think it was a fusion between euros and dollars. What's this new
Mm-hmm.
currency? It's offshore dollars, dollars that are
Mm-hmm.
generated
Yep.
outside the United States. And I know
Yep.
there's a few trillion being held in the UK, in the city of London. And then the LIBOR is the interest rate for the US dollar that was set and created by the city of London that Trump retired with J Powers Corporation and replaced it with SOFR, which is a
Mhm.
domestic interest
Yes.
rate for the
Yes.
US, which means that the US now has control over the price of its
Right.
dollars.
Well, and most people will say, well, doesn't the Federal Reserve do that? And I would say, somewhat, not really. When the Eurodollar system was in charge and all of our debt was indexed to LIBOR, then the LIBOR was the price for dollars in the Eurodollar in the offshore dollar markets. It also got added. It also got incorporated by rote into American domestic lending as well. Like your car loans used to be indexed to LIBOR. And all of that. So anytime the Federal Reserve tried to, manage interest rates to best serve our economy, well, everybody else who'd levered up their euro dollars more would get a cold, and then it would translate into a recession here in the United States before the United States economy was actually would have under other circumstances would have run into trouble. And
Mhm.
that's a I've done many a podcast in the before time in the 2022 2023 era where I explained all this in more detail. Understand what's happening now is that all Besson is saying is, look, I know that there are a lot of people angry that I'm not going to allow the Japanese to be sacrificed on the altar of this failing an old Eurodollar system, this quote unquote yen carry trade, which is another long-winded explanation is coming to an end because the Japanese are having to raise interest rates to offset inflation, some of which Trump is now put on their back because he's raised the price of oil. And, in response to Trump hurting the Japanese by raising the price of oil in order to, reorganize global trade flows away from the Strait of Hormuz, then the natural response to that, if the US and Japan are allies, is to support the Japanese financial
Yeah.
market. So, I mean, just in broad strokes, if you understand that, at a symbolic level, like if we're allies, we should help defend the Japanese yen and the Japanese bond markets. Okay. Well, if that's the case, the people who were using Japan as a source of cheap funding, because even with the Japanese at 1%, everybody else is much higher rates than that. So there's a natural interest rate arbitrage that you can pull free money out of,
Mhm.
like a one-armed bandit at the casino that always pays. Okay,
Yeah.
just to make it simple for people. That trade has been in place in various forms and at various levels of profitability for 60 years. Okay, 70 years since post Bretton Woods. Okay, when we started rebuilding Japan, so what's important now is to realize that we are in a transition period from a time of maximal yen carry profit to diminishing yen carry profit. And what the Bank of Japan has done quite politely and very Japanese like is to move interest rates up slowly and let everybody get their off ramp and get their ducks in a row without too much shock.
Okay. Very quick
So,
explanation about yen carry trade. And we did cover
mm,
this in a previous video between you and I.
mm, mm,
Borrow from Japan at 1%, a whole heap of money, and then go and deposit somewhere else at 3%, 4%, and make a profit. The free money is the difference
mhm.
that I'm paying back 1%, but I'm getting 4%. So there's
But I'm getting paid
3%
4% over
arbitrage.
the, yeah,
Free
and there's a
money.
3%
Yeah.
arbitrage that you then use to pay back the loan, the short end of the loan with, right?
Yeah.
But
And
if the
that's been going
currency,
on for
but if the
years.
currency moves, then the profit as the currency widens or as the currency moves one way or the other, your profitability either goes up, it goes to 3.5%, or goes down to 0.5%, depending on which currency,
Yeah.
falls, right?
And
So
Japan and the
if the
US are working to raise Japanese interest rates, which will mean that the carry trade isn't as profitable as it was before.
right.
Excuse me, have you signed up for my free newsletter yet? Go to richdoespolitics.com.
And what the intervention did was move the yen from strengthen the yen directly, and did so at a point when everybody had bought the breakdown in the weakness of the Japanese yen. The Japanese yen hit an all-time low in July, and then momentum at that point. If you know anything about the way capital markets work, momentum traders buy the breakout. They buy the breakout. They're
Mhm.
waiting for the definitive signal that the supply of, in this case, sellers of the yen, because the yen is falling versus the dollar, is way overwhelming the supply of buyers. This thing's going to move from 162 to 180 or something like that, and they're going to make a whole bunch of money. So they all go short the yen at that moment in time to make a whole bunch of money. And Besson came in at like 165 on the yen, along with the BOJ, Bank of Japan, and brought it back to into the 150s, mid 150s, which then forced a whole lot of people to cover and scramble and everything else. Oh yeah, and the key to that trade was that he sold euros, not dollars, to strengthen the yen, which strengthened which weakened the euro yen cross, which is the currency pair that the ECB was rigging in order to hold their ever tightening yen carry trade profits positive, so that they didn't have to unwind those positions and have traders start selling their German bunds versus Japanese bonds, or their French cheese bonds versus Japanese versus JGBs, or their Italian BTPs versus JGBs. This is the thing. So when I say that these people have been running a yield control program against the United States, they have been. But the entire time, you can't rig everything all at once. You can rig some markets, and as market forces are taking over, and the Bank of Japan is not fighting the rise in the long end of the Japanese yield curve, Japanese 10 years, 4 years ago, were pegged at 0.1%. Today, they're trading up 2.9%.
Wow.
Okay. So there was a massive carry trade that was built up, during the ZERP and NERP years, during the 2010s and the early 2020s. And I've been on this story since the day Even former BOJ head Kuroda announced that he was going to allow that band to widen from 0.1% to 0.5, and then he left the scene. Kazuo Ueda came in, and he's at the Bank of Japan now, and he widened it to 1%. So he let it rise to 1%. Then he had to give. Then that peg failed. Then that limit failed. But of course, the Japanese Ueda knew that that was going to fail. He was giving the markets time to adjust to these new interest rates and to unwind previously profitable trades and move their money into other things. Because look, at the end of the day, you stay in the free trade if in the free money trade of the yen carry trade if you can't get better yield somewhere else. But
Mm.
if you can get 5% on a directly on a US Treasury bond, why even futz with this, yen, euro pound, whatever. Just go buy US Treasuries because Jerome Powell raised the long end of the yield curve, raised U.S. interest rates into the 5% range. While Japan was beginning to raise interest rates, people could just leave the yen carry trade and go buy 3-month T-bills and get 5% like on 3-month money. Like why would you stay in a 4% yen carry trade? Doesn't make any sense. Capital goes to where it's treated best. So as those trades were being unwound and they were moving, and then the Fed starts to lower interest rates, and that starts to change all these are all moving targets, folks. Like, and these markets are not stagnant, they're not static. The counter moves that happen are not. You can wait for big moments like the intervention on July 31st and like Bessent stating that he's going to support the long end of the US yield curve, because I'm going to get to why that's important. Those are big moments. So back to my original statement about, well, if the United States and Japan are allies, right, then it would make sense that the United States would come in and intervene in the end to stabilize Japanese capital market. Well, that's going to have an effect. That means that there's going to be a response to that. And that means the people who are hostile to the United States are then going to make their move, which in this case was punish the United States for their lack of vision by selling the long end of the US yield curve and pushing long-term rates in the U.S. up to 5.25%, pushing 10-year yields to 4.75%. At which point, Bessent came in and went, "That's enough of that. Bad limey, no biscuit. You can't. You don't get to keep doing this. We're going to backstop this." What it's also saying, and the reason he can get away with that is because the U.S. is the biggest dog at the table, and we're about to change the Treasury transmission system. And as we get closer to the midterm elections, okay, what Bessent is saying is we're going to be the premier destination for your capital.
Oh,
You're not going to lose money and have to, if you buy 5.25% 30-year bonds now, you're not going to lose money when they go to 6%. Because remember, when the yield goes up on a bond that pays the same coupon rate, it is the bond, in order for that yield to go up, the price of the bond that you pay for it goes down. So let me make this simple for people who, you say bond math is not hard. It's just stock prices in reverse.
mm.
But you buy a bond, right? It pays 5%, and nominally you pay 100 for the bond, par, what we call par, 100. If the market doesn't believe that bond is worth 100, right? Then they'll sell it, and the price will go down to 90. At which point you'll convert that 5% coupon payment into a yield that you paid 90 for, because you only paid 90 for the bond, even though the bond's still going to pay 5% of the cash value, but you only paid 90 for it. So your effective yield is a little higher than that, because you
Mhm.
get to capture the difference. And that's what I mean by when bond yields rise, prices of the bond fall. No different than your static dividend payment on your stock that pays $1 a quarter, but the stock went that was when the stock was $20 a share and it paid $1 a quarter. Well, that's a 20%. That's a $4 a year on $20. That's a 20% dividend. It's ridiculous dividend, but just for the sake of math. But if that stock goes to $50, now you're only getting paid $4 against $50. The yield on that stock is now a lot lower than that. It's now 8%. Bond math is just stock math, stock dividend math in reverse. Okay. So, but if you bought it $20, you're still getting paid 20%, right, on the money you put on the table. The guy who you sell it to is only going to get 8%, right? So what Besson is saying to the investment world is, look, I'm going to backstop the long-term treasury yields in the United States. You can come in and you can be assured you're not going to lose a lot of money, and we don't have to worry about it going to 6.5, 7%. If it goes to 5.5, nobody's going to care. But by making a statement here, and it's not a very big statement, all he did was say, I was buying back $2 billion at the time. Now I'm going to entertain offers up to $4 billion. Now, the interesting part about this is this program's been in place since he took over at Treasury. No one complained about it before then. No one called it QE. No one called him Janet Yellen. No one said anything. As a matter of fact, the thing just kept ticking away in the background. And every once in a while, the Treasury would go out there and put out a request for bids. Hey, do you want to pledge your bonds to us and sell them back to us? So you get 35, $40 billion worth of bids for people to sell their 30-year bonds back to him. And he'd only buy 2 billion. And he'd only buy the 2 billion that were the most distressed. He bought them at the lowest price. He was buying bonds back that were trading at 79 cents on the dollar and retiring them. Okay. Like that's what he's doing. So if this was yield curve control, if this was some kind of an unmarket a non-market function, there wouldn't be a whole bunch of people trying to sell treasuries to him at distressed prices, and he has the ability to pick and choose what he wants to retire. That's what he's doing. And all he's
Okay.
saying is, I've got the treasury's flush with enough cash that we can do more of this, and we can retire more of the ugliest debt. That's all
Okay.
he's doing.
Okay. And this is how he slapped Europe on the wrist and saying, no, no,
Hmm.
no, you're not doing that by doing this backstop.
Hmm.
Okay.
Because now, because now the institutions know that he'll come in and effectively he's going to protect the long end of the yield curve, and that will create more buying demand at these prices. He's not really affecting the big supply of 30-year bonds that's out there. He is a little bit, right? At the margin, he is certainly, but it's more the statement. And while I was describing all this for the listeners, the thought that popped into my head is the Treasury's flush with capital. This is telling me, Bessent's signaling to the capital markets, by the way, we probably have the midterms in the bag because the only thing keeping capital from flowing into the United States is the political uncertainty around the midterm. But if Bessent's literally saying to the capital markets, to the most powerful people in the world, to the
Mm,
insurance companies, the pension funds, the institutional managers, all these people, the state pension fund, these guys, everybody. I mean, I don't know about you guys, but I'm looking at TLT, which is the long bond ETF that everybody can buy. I'm looking at a 5.25% going. That looks good.
yeah.
That's
Okay.
tasty.
So then, Tom, this would accelerate the draining of capital from the Eurozone and from the UK into the
Mm.
United States, further putting pressure on the bond markets in Europe and the UK for them to rise because it gets riskier, which
That's one
will,
way of looking at it. That's one way of looking at it, Rich. I want to stop you there
okay,
because that's an astute observation, but I don't think that's what's actually happening. Okay. What I'm saying is a little bit more subtle now. All I'm saying is that they're going to sell in order to defend their currencies, in order to defend their situation. They have
they're going
to.
to
They're
sell
going
the
to
dollar.
use. They're going to no. They're going to sell the treasuries
Oh,
as a
sorry.
means by which to punish the U.S. for trying to act like an independent nation.
Yes,
And
quite
Besson
right
came out
too.
and said, "I'm going to blunt that by giving the market the signal that things are fine."
Mhm.
Now the market's going to test him, obviously, but I don't know about you. I wouldn't bet against the guy at this point.
Well,
Not with the amount of tariff, not with
yeah,
the amount of tariff revenue that's coming in, not with the changes. And then he came in the other day and he said, I saw a clip with him yesterday. He said, we came in and inherited an absolute mess from the Biden administration. It was a vandalous and scandalous situation, and we cut the deficit by over 1% of GDP in a year, in in all but without even being able to do the things that we wanted to do because we were cock-blocked by Congress.
Mhm.
I mean, those are statements that you would normally hear out of a president, and
Mhm.
you're hearing it out of the Treasury Secretary.
Well, what that shows is the partnership between
Hmm.
Trump and Besant, and
Hmm.
also Besant's incredible skill at this,
Hmm.
which is something it came out in one of his interviews and stuff when he was asked, like, what he did for Soros and stuff. But Tom, there's
Hmm.
something missing from your analysis, right? Because ordinarily,
Hmm.
what I find your analysis is multifactorial. You're not just looking at one thing. But I think what you fail to take into account is the European and British markets, economies, how incredibly robust and powerful and dynamic they are.
I knew you were gonna do this, Rich. I could see the I could see I could see it coming. I'm like, where is he going here? You know, you're to be fair, my friend. I do love it when you do that, by the way, because you're actually getting better at keeping a straight face on it. So
Oh, it's hard with you. It's like, okay, he's watching
point.
me now.
Yeah.
He's watching me. And then I know I'm
Um,
talking nonsense.
it's not nonsense. It's a good. It's actually a good question because it actually help answers itself in a sense, which is is that the case? Well, no, it's not. We know it's not the case. We know that all of that the reason they're having to rig the bond yields, why they're having to rig the currencies, they're really just rigging the currencies. Okay, and then manipulating the spreads between everybody's debt in order to write headlines and keep themselves solvent and everything else. It's masking the fact that they're running big structural deficits. They've got industrial production problems. They've got
Energy problems.
consumer energy problems, consumer problems, inflation problems, this problem, that problem, everything else. And so now I ask the simple question: if you're Donald Trump in this scenario, do you negotiate with Iran?
No, don't need to. Just keep
Okay.
putting the squeeze on them.
It's because you're squeezing Iran to squeeze everybody else.
Yeah, which is something people don't get that the I think in the mainstream and in a lot of the independent media, Trump is attacking the EU and the UK and the
Mhm.
City of London underneath it all.
And others, and their, you
There are other
know,
proxies.
yeah, well, it's proxies or subsidiaries, their fellow travelers, whatever. Like, and remember what Besson is doing, and it's deeper than that. But I'm going to leave some stuff on the cutting room floor because I do have to protect my subscribers. Meaning subscribe and you'll hear more. The what is also going on, but if you can piece these pieces together, you can piece the rest of it together pretty quickly if you know what I'm talking, if you know financial markets at all. But that's why they're also shutting off the banking channels of the IRGC. That's what I'm saying when I say things like he's flipped all the Gulf Cooperation Council states on the west side of the Strait of Hormuz, Qatar, Oman, the UAE. He's flipped them because they don't have an option to play around, in the background, in the shadow banks, and all this other stuff, letting Iran get dollars that they don't, and get access to collateral and dollars that that we don't want them to have. We're putting them all on the chain, and we're like, sorry, you have to work for us to fix this situation. We can't fix this situation. Then we can fix your long-term stability. In effect, let me put it this way. You used to work for the British and the French Eurodollar system over here, and you were making scads of money on it. There's a new mafia boss in town. His name is Donald Trump. His name is the United States, and we're not playing that game anymore because we were the ones holding the bag at the end of the friggin' collateral chain. We were the ones have our taxpayers were the ones that were funding your yachts, to make it like abundantly clear, because all the
Mm.
profits that they were generating were coming off the back of the American taxpayer for all intents and purposes. And Trump's like, no, I'm not doing that anymore. You work for me now. You're going to take that money and you're going to reinvest it in the United States. You're going to stop playing footsie with the IRGC under the table and the shadow banks and everything and all your no, we're not doing that anymore. You work for me now. Now, your give on this is that you're going to be able to build pipelines into Europe. You're going to be able to get around Hormuz. I'm going to make sure that I'm going to end, if you help me, I'm going to end the Iran's retaliatory threat against you ever again. Again, I'm painting a simplified picture here.
Mm.
The picture is actually more complicated than that, which is, look, they're just responding to the status quo, which is that there's this big blackmail ring happening coming out of Tehran and London and Paris, which they're responding to by, pulling a vig off. And as long as the United States was allowing it to happen, why wouldn't they do it? I don't blame them for it.
Makes
I'm
sense.
just telling you, I'm just telling you that, if I'm an UAE sheik and I want to sell oil or I want to have banking operations and I want to do X, Y, and Z, like, okay, like if the US is going to commit ritualistic suicide, who am I to stop them? And why shouldn't I profit off of it? Again, in international relations, countries don't have friends or allies. They have interests.
Mm.
So it's in the UAE's interest to, if the United States is going to, commit harikiri, great. I'm going to get a piece of that. Oman, same thing. Saudi Arabia, same thing. This one, same thing. France, same thing. Poland, same thing. Whatever. I don't care who it is. Pick a country, right? and the power that that country has relative to the market or the aspect of geopolitics that we're talking about will determine how big of a factor they are and whether they're a price taker or a price maker, whether they, are an order maker or an order taker. Like it's not that hard, folks. And it's not 5D chess. It's just complicated because guess what? People are complicated. It's messy because people are messy. And
Well,
because arbitrage is always ground out by the market. That's another way of saying people see an angle and they try to grab some vig off of it.
yep.
You would
And
do it if you could. So
yep.
shut the fuck up and like
And
let's act like grown-ups.
it's also complicated because it's not a simple two-agent game like
Mm-mm.
soccer or basketball. No, there are many, many different players with different
Right.
skills, different
Right.
intentions. I mean, it is the financial markets are incredibly complex battlefield,
Right.
right? And then one of the concerns that I have, Tom, that I wonder
Mm-hmm.
about is the globalists, the City of London, they have to do something for the midterms that's in their favor to
Mm-hmm.
so that Trump doesn't get a majority in the Congress, doesn't get a majority in the Senate. And one of the probably the best way they can do that is by crashing the economy
Mm-hmm.
in the month before the midterms, so that they can everybody's like, oh my God, Trump's made things much, much worse for us. So
Mm-hmm.
what about that? And how will that be dealt with and come about? And what can Trump do? I'm sure he's thinking about that.
What I would argue, this is the thing that's funny. Um, Everybody is acting like Besant has responded to the situation in the bond market. What if he's setting the operational tempo? Meaning someone was running and short yen, short treasury trade for the purpose of crashing the bond markets and the financial markets. And Besant came in and said, no, you're not nipping that in the bud right here, right now. We're not even going to let that. We're not going to let that fire get started. We're going to let you all get on the wrong side of the trade. And once the commitment to traders report for the Japanese yen looks like this, when it gets to that level of bearishness, intervene.
Okay, okay,
Meaning, you deploy $5 billion to get $50 billion worth of liquidation. You deploy $40 billion worth of Japanese and American capital to get $400 billion worth of liquidation because all these markets are levered. You don't buy a yen, right? You don't sell a yen and buy a dollar to make 5 cents if the thing moves 5%. Who cares? That's like picking nickels up in front of a freight train. Why would you do that? You're levered up 1,000 to 1 in order to put $5 on the table to make 5 grand.
right.
Then when you start talking about leverage in the forex markets, ugh, you're not ain't nothing like what we're talking about with you think SpaceX is trading at a multiple to its revenue to its earnings. I got news for you, folks. You haven't even ever tried to trade forex. I remember when we was as Americans back when I was before I was a public figure, before I did this for a living, and I was actually still working as a chemist, but I was watching all the financial markets. And one of the guys that I worked with, my last job, he bet on some currency pair. He put like $50 on there or $500 on the table. He was like, I just made 42 grand.
Jeez.
Yeah, like $100 bet turned into $42,000, like because you're levered 1,000 to 1 because you put $5 on the table, but if the currency moves 3 points and boom, you're like I think he bet against the euro or whatever during one of the debt crises. It was late in my term, but I can't remember when it was. If it was 2208 or 2010 or something. It's some. I remember. I'll never forget. Scott walking in and going, "Dude, I did this. Holy shit!" And I'm sitting there happy that I made $500 trading a gold stock. Like, you know what I mean? And at the time, I used to trade these things, and I was like, "Ooh, I made $500 today." Like, I'm rich. He comes in, he's making 40 grand. I'm like, I'm clearly doing this wrong. It was right after that that the Americans just shut down all forex trading on foreign sites. We're not allowed to do it anymore. We're period. No, directly. We are not allowed to trade forex out of American, attached to American bank accounts. They can't
Right.
accept American clients.
Yeah, even if Americans used nordvpn.com/crypto rich, they would still be in violation of
Mm,
American law,
a
right?
fat
But that
guy.
doesn't mean other people can't use nordvpn.com/crypto rich to bypass
Well, I mean,
controls.
if that floats your boat, you go right ahead and do so. Yeah.
Well, it means that I in the UK can look up Russia Today. Should I be minded to, or
Yeah.
BitChute
Or you know,
or whatever?
anything.
Yeah.
Or access your own friggin' channel,
Yeah.
dashboard on YouTube at this
Yeah.
point.
See my channel on BitChute. Okay, so then Tom, what I got from that
Mm.
is that any crashing of the economy can only come through the bond market because that controls the currency markets. They couldn't do it through like by selling stock, selling Nvidia stock and Google stock and all of
Well,
that. Because
actually, they can. I think they
but
tried that. I think they tried that with the South Korean
but
stock
some
market
but
because about,
buyers would just
but
move in, would they
maybe,
not?
maybe. Like I found it really interesting that at the same time that the yen was starting to break down, that we were having these like limit down days on the Kospi, the South Korean index, which is another AI trade, by the way, because it's the memory part of the AI trade. Whereas we're everybody's focused with again Nvidia and all the chips, but there's the actual consumer the memory modules that you need to run without memory the chips are useless.
Hmm.
Kind of important. So that's where Samsung and SK Hynix and all these other companies, those are all there. So there's been a lot of turmoil in the Kospi, the South Korean Kospi index, and I think that may have been another one of those. And again, did somebody come in and intervene in those markets as well? Again, when I haven't done the cross market analysis on that particular thread, but it's something that came up the other day actually on the GG&G Slack server. Somebody wrote a really great post about that side of it, and I was like, wow, that's a phenomenal post, and I'm gonna consider that, and I'm gonna talk about it in public, and yada yada yada. Thank you, and it's why I have the greatest friggin' community in the world for this exact reason,
Yep.
because I've got great people in there who really understand how these things work, and they teach me stuff all the time, and then and they're
Tom,
happy. They're happy, of course, to pay me $12 a month in order to have a conduit in order to get their ideas out in public, because that's what happens.
yeah,
So,
no, Tom, I've been a member of your community for many, many years. You do
mm,
have a great community. I'm growing my baby community. So
hmm
my little baby community, and one day, who knows, right? But please join
hmm
both. Thanks, Tom.
sure. No, it's really important to understand that I've said this many times, and I will continue to say it, that what you see is an amalgam of my conversations with all the people I do publicly, conversations I have with people privately, the immense work that my community does, and I get to synthesize all that into hopefully what are coherent talking points, along with my own. I'm not going to deny I have my own set of talents, folks. I'm not
Yeah.
going to lie, but you know, but the talent really is in taking all the information, sifting it, and then trying to synthesize it into something actionable and something usable, right? Because there's a whole bunch of information out there, but it's useless if you can't direct it into some kind of behavior,
Mhm.
or at least some kind of the word that keeps getting thrown around is thesis. I would prefer hypothesis, and every day we just kind of like get rid of the H, and then we have a hypothesis, and then we have a pothis, and then we have an then we have an othis, and then we have a thesis, right?
No, well,
Um,
no, then definitely we will then have potentially what we want is the and an is
or what we'll have eventually is the theorem, right? We'll go from postulate to theorem
theorem.
to
Okay.
law,
I was,
right? But yes, I know we would like to have the thesis, and there is no the thesis. The thesis is there's a bunch of shit going on in the world. Being a shitbag's not an ethnicity, and everybody's scrambling for a dollar. That's the thesis.
that's
That's the
amazing.
that's the thesis, folks. It ain't more complicated than that, but it
Okay.
is, right?
Okay, then moving back to crashing the economy. So they can't do it in the bond
Mm.
markets because Besant is stop gapping it. But
Well,
then could they,
as best he can.
as best you can, could they do it by crashing the Dow Jones or the Nasdaq? Is it because it's too large? Because they can
They've
go for
tried.
South
They've
Korea
tried.
much smaller.
They've tried. They've tried. I think you're astute in asking that question. So then, the bigger question is, can we strike back in such a way that we blow up
Oh,
their currency rigging? See,
yes.
that's the game. Like in war, we like when we talk kinetic war, everybody understands. I've got a trench over here with some machine guns. You got a trench over there with some machine guns. Who's going to charge the other one's nest? Well, that would be dumb. But in financial markets, it's harder to like construct that standoff between people for if you don't understand how the markets. I mean, again, and I'm not saying I'm not. Oh, I understand the market, so therefore, like, no, dude, I'm like this shit's hard.
And
Okay,
complex.
it's not part of our day-to-day routines. If you don't live in this world where you're trading stocks, watching the knife fighting, I've done all of this at a very rudimentary level in my life, so I understand it when I listen to really professional traders, people like Vince Lanci or Matt Dines or others who do it for a regular on a regular basis, and they can just read those quote screens that would look like gobbledygook to me, but they know exactly what it means. I know I can trust them when they tell me what they're seeing because I've done a version of that trading stocks, trading gold, trading this, trading. I've done these things in my life, and so you can use those folks as resources to help you make sense of it. But they'll lay the battlefield right out for you in no time flat. It might take me 3 months to figure it out because it's not in even in in what I would consider my state of enlightenment is such that I have to birth this stuff out of whole cloth and work through it on a regular basis. It's funny you ask why do why Wednesdays and Sundays do the market reports come out? It's because those are the two times of the week that are the most important for me to force me to stay looking at the markets and not get distracted by some other thing that's going on
Mm.
out there or take too many days off in a row to recharge my batteries. I have to stay in it on a regular basis because if you don't, you fall behind and then you don't have the ability to just like sit there with data and market movements and all of this stuff. And you've
Yeah.
been there long enough to know that
Oh,
the market report started with like 4 slides and now they're 17. Like, it's crazy. Like, and I'm
I get
like,
it. The market report, I never miss one.
mhm,
There, and I know you don't like people doing this, but I'm always checking, is it out yet? Is it out yet? Right?
I know.
Never miss one. I've learnt loads from them.
Right.
Incredibly informative and entertaining as well.
I do
And
try.
secret information as well, just for the
I wouldn't say
patience.
secret information, but eventually it all leaks out into the public.
Yeah.
But I don't care. Like the point being is that if you drive value for people, this is the important part. This is like we can move on to the next video after this or whatever you want to
Well,
do.
no,
But
the gold,
there was a
silver, and Bitcoin. I want to
yeah,
cover
we're going
them.
to talk about those. Yeah, so if you drive value for people, they should they should feel like guilty for not giving you money. That's the way, and that's my business model. My business model is to try and drive as much value for people as possible, even if you don't like what I have to say. Right? That's even better. If you don't like what I say, that's even better because now you're forced to confront something that you're not comfortable with, and you have to sit with why it is you think you're comfortable with what it is you think you know. And if something I said spurs you to steel man your original argument that you disagree with me about, great. Then that was a value to you. And that wasn't.
Very good. Okay, gold, silver, and Bitcoin. What's
Mm.
going to
So
happen with
what's
them?
happening? What's happening? So in response to Bessent's, statement the other day,
Hmm.
we finally started getting movement in gold, silver, and Bitcoin. The collateral is now moving up in price. And a lot of people want to interpret that as the dollar is falling. Bessent's got to do yield curve control. He's being turned into Yellen. There's the big print that's coming, blah, 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 blah. And so gold, silver, and Bitcoin are all rising.
I'm
Well,
sorry, Tom. I just had a look. I can't believe this. Bitcoin's up 23% over 7 days,
mhm,
7% in the last 24 hours,
mhm.
$77,500.
Gold is at 46.70 and spiking. Silver's back to nearly 70. Yeah, no, I know. It's exploded in this week. And so the question now is why did the switch flip? These markets were all basing, right? They
Yeah.
were all basing up until last week. Gold broke out first. Silver tried to break out a little bit last week. It was lagging earlier in the week. Bitcoin made no move whatsoever into last week's close on Saturday, which is when I look at it. When I define the close, because it's just when investing.com, which is what I use for my data source, that's when this defines the week as Saturday, Sunday morning at midnight, right? And it was held below 65,000 on that close, and then exploded on the upside. There's a lot happening. And again, all of these things I think these moves are all in service of the same thing I said earlier. Now, you can take a different view of this, but my view of it is that it's the markets finally realizing that, nope, Bessent's in control of the situation. And the United States does want a higher gold price and a higher silver price and a higher Bitcoin price because we're moving towards clarity, the Clarity Act getting passed. Bessent also came out and said, "Look, if Congress won't pass the Clarity Act, we're going to set up rules for our banks to do business, our corporates to do business, regardless whether the Congress does their job or not." That was a big statement, and everybody ignored it. But the Bitcoin community didn't miss it. Like I know the prominent Bitcoiners that I follow and that I talk to, they didn't miss it. Like we're moving forward, and so someone got the green light that we're now moving into the next phase of collateral expansion, national balance sheets in order to offset the debt. Okay. Remember, folks. I talk about this all the time. I make this point all the time, and no one wants to, and not no one, but and people want to push back on me about this. We're $40 trillion in debt. Yes, we are. We are. No argument. What's on the other side of the balance sheet? What assets does the United States control? I would like you to tell me, do you think we only have $5 trillion worth of assets? Really? Assets in the United States? No. Obviously, the balance sheet of the United States probably has $500 trillion worth of assets on the balance sheet at today's prices. When you factor everything that's in the ground, everything that's been built, the IP, the patent law, how much is our legal system worth? How much is our corporate law worth? How much is our tax structure worth? These things are all worth something in terms of a national balance sheet, right? Like if we're talking about the national balance sheet of Sri Lanka, it's their gold reserves because nothing else matters, right? Right. Japan, same thing. What's their? Yeah, they've got 230% debt or 204% debt to GDP. It's not 233. Anybody who quotes that number is quoting 2020's number. It's 204 and it's falling, by the way, quickly, by the way. This is a very important point. Everything is like all these yen bears need to like get over themselves. I'm because they're before they go broke. Okay. I'm telling you this right now. You're a yen bear, you're going to go broke. Okay. Because what does Japan have? Does it have the ability to service? It may not have the ability to service that debt at much higher interest rates than it is, but it has a national balance sheet you can deploy and unleash with the right regulatory framework, with the right tax structure, with the right this, the right that. All of a sudden, those assets that are being held down in value because of onerous regulatory problems, political indecision, blah, 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 blah. Those all depress national asset prices and the debt keeps rising, right? And that's fair. And that's a fair argument. No argument. I'm not saying that that's not been the case. Is Obama president destroying the country? Is Biden destroying the country? No. It's Donald Trump is in charge of the country. Scott Bessent is managing the Treasury Department. Pete Hegseth is in charge of the War Department. This is a different world than the one you've had before. So again, go back to what I said earlier about, when Bessent comes out and says, I'm going to expand the amount of long-term treasuries I'm willing to buy, that's a way of saying it's kind of a put under the market. It's basically him saying, look, the water's fine. Come on in. We're not going to treat your capital badly. And we have the ability and the capacity to treat your capital well. That's all it takes. That's exactly what I was saying 4 years ago, 3 years ago, 4 years ago. I was coming on podcast going, guys, we can cut $1 trillion from the budget tomorrow. It's all fraud. Like the same people who would argue that government can't do anything right and it's inefficient and it's this and it's that and it's horrible. Same libertarian arguments about, terrible, government inefficiencies. Well, what if we get rid of the fraud? Could we balance the budget? And no one wanted to answer that question. But you know why? Because then it would take their argument away from them.
Yeah.
Okay. So what I'm getting at here is that the signs and the signals are there, and the way gold, silver, and Bitcoin are acting, the way the bond markets are trying to act. Like again, we're in a situation right now where everybody who is against the United States is going to press as hard as possible to paint the picture of a failing country. It's what they're going to do. Okay. But we're reaching the limit of narratives, folks, and I think everybody's beginning to figure that out.
Okay, I have a question about Bitcoin. Something you've said that the 4 year cycle, and I'm going to explain what that is to the viewers in a moment, right? Who don't understand Bitcoin. The 4 year cycle doesn't have the same hold as it has had before, right? Now, what the 4 year cycle is there's a price action pattern with Bitcoin over 4 years, which is the price reaches an all-time high, and then traditionally what's happened, it crashes, reaches an all-time low or a whole new low for a year, and then slowly starts consolidating, and then reaches an all-time high before crashing again over a period of 4 years. And that's tied to the Bitcoin computer code. So, and I notice, like, I'm trained in the 4 year cycle, right? It's what I've used. And so I'm loath to, what you mean it doesn't apply anymore? This could just be a dead cat bounce, which is where, for people who don't know, price falls of something, it looks like it's going to rise up again and then falls again. Yeah. Like when a cat bounces.
Yeah, it's a dead cat bounce is a Wall Street term for even a dead cat bounces after you throw it off a 40-story building.
Please don't do that with cats at home. And
obviously, but
cats were hurt in the making of this video.
Making of this video, of course. No, but that's the old Wall Street adage. That's where the dead cat comes from. But what's important to understand is that a dead cat bounce is also something that happens immediately. So you get an emotional low. You get everybody selling. The buyers come in, they push the price up. That's the dead cat bounce, and then there's the collapse.
Ah,
Bitcoin's not Bitcoin's
not done that.
not tracing a dead cat bounce. The first fall off of 125 to 85 and then back up to 100 and then down. That the fall from 85 to 100, that's the dead cat bounce. This is just
Yep.
normal. The buyers all left and they're all buying other things, right? And maybe some of them are just waiting for the 4 year cycle to come to play itself out, and that's why, and they're just waiting for a signal. Maybe what I and look, I'm not saying that the 4 year cycle doesn't matter. Okay. What I'm saying is it might not hold the same power that it did in the past because this 4 year cycle was governed by SOFR and not LIBOR. It was
Right.
governed by the return of American financial sovereigntists to the Treasury and Federal Reserve, as opposed to the years that Bitcoin made all the easy gains under Obama, Geithner, and all the other resident shitbags. See, and I put that again. This is one of those arguments I like to put forth for people who are screaming at me in the comments right now or listening to this. Going, like, oh, steel man the argument. I'm presenting an alternate view of this, not necessarily because I believe it, but because it's something to consider to steelman your normal, could possibly be lazy and inaccurate projection of what's going to come. I had to do this with gold bugs all the time. And I learned how to do this when dealing with gold bugs, when I had to get myself out of that. Oh, well, they're going to print to the high heavens and gold's going to go to some number and I'm just going to keep buying gold. Yeah, it's nice. It's a lazy argument. It is. And I lost money after 2011 because I didn't sell my gold at the peak and then buy back in 2015, which is what I should have done. I should have, especially when the 2011, I lost my job. I was flat on my back broke. I needed the money. I should have sold gold at 1900, silver at 50, and then, cleaned up my personal balance sheet. And then I would have been able to buy back all that gold at the bottom for $1,000. And I could have, and I would have had a better starting point, if I had just rebought my gold position in December 2015, which was the bottom. I didn't. And I learned a very valuable lesson. So we're all going to learn. And sometimes you have to learn those lessons in order to be able to become a better analyst. And this is part of the reason why, folks, you hear me talk about all this financial stuff, you'll note that I do not trade these markets
It doesn't.
at all. I do not trade these markets. And the reason I don't trade these markets is because you've watched me on a podcast. You know how volatile I am. I got news for you. You think I'm this dispassionate an analyst when my money's on the line? Are you kidding me? I'm a wreck. I check my balances like 17 times a day. It's awful. I gotta like stop doing it because I'm awful because I'm not built for it. My personality is not built for it. So I
Tom,
understand my
that's a really, really good point. I'm just picturing, you make a trade, it loses, and just I'm trying to imagine the swear fest that then
No, it's actually
ensues.
what happens is I it's the same problem I have as by the way, this is a little tell. This is the same problem I have with a poker as a poker player. When I have a good hand that gets busted, I can't get out of it.
Ah,
I can't get away from it. I wanted to put more money on the table to prove, oh yeah, you did have
ah.
that ace queen to beat my ace jack. And I'm like, there you go. There's another $10 out the door. And the other guy on the other end of the table's going, I'm like, I got a data point. He got my $10. Who won here? Like that data point was not worth $10. You already knew that before you put the other $10 on the table, you moron.
Tom, Tom, thank you so much. Always
You're
a
welcome.
pleasure and a delight and an education. Go check out Tom's work. Links in the description below. Sign up for his community, sign up for my community.
Hmm.
Thank you so much. Let us know what you've learned from this conversation. This is Rich and Tom signing out. All the best. Bye bye.